Hello everyone, so we just got the CPI from Europe out yesterday at 7 p.m. in Sydney time, and looks like that inflation is not cooling off and it's a bit of a stickiness flying around on Europe. So let's dig a little bit deeper into that topic as we see the euro weakening quite a bit, all right, trading now below the 1.17 that it was trading yesterday. And as the US dollar gains strength and gold gains strength as well. So, but before we go any further, just don't forget today's Wednesday, so we do have the webinar from 4 to 5 p.m. So make sure to join the webinar through the Telegram. So if you're not in the Telegram, then it's very simple. Just go in the description of the video, click into the Telegram link, and you will be redirected to the Telegram where you can join me and have daily updates on those topics as well. And that's where I will be able to dig a little bit deeper into the CPI and go actually into what was the change. Okay, so the CPI, the core CPI came in a bit higher than what was previously expected. As of the other CPI, so the CPI over year, the CPI month over month, came in line with consensus. Okay, so the month over month we actually didn't have a consensus, but it came in higher than the previously, but as we didn't have consensus, so we're not too sure. Now that means say the core CPI is where the ECB pays most of attention, because that excludes the most variable and volatile items from the basket of the CPI. So that is electricity and food. These are the two components that the central bank, they can't have any influence of it. So whatever they do won't influence. So if they do open market operations, if they do quantitative tightening, quantitative easing, if they do any of the tools, you know, hiking the rates, lowering the rates, making the rates neutral, forward guidance, all of the tool set that they have, whatever they do on that won't change the core CPI. So the core CPI is the actual measure where they pay most attention of whatever if they're doing is working or not, okay? So that came in 0.1% higher than expectation. So the previously was 2.3%. Consensus was to decrease from 2.3 to 2.2, so 0.1% lower, but actually came in as previously, so 2.3%, so 0.1% higher than the consensus. My opinion is, and I've made very clear yesterday, and also on the webinar, I've called this trade. If the CPI came in higher than expected, euro would lose strength. If the CPI comes in lower than expected, euro will gain strength. And the rhetoric here is pretty simple. The ECB is waiting for the inflation, is forecasting the inflation on the medium term target. That means for this last quarter of the year and the first quarter of next year, so in around 6 to 7 months, they're expecting inflation to be at 1.8% to 1.6%. Having an inflation above that basically shows that they are completely wrong and they don't know what's going on. So the investors lose traction and lose interest about buying euros, so they sell the euro. So now the actual good is good and the actual bad is bad. And what I mean by good is good and bad is bad is simple. Last year and the year previously than that, so 23 to 24, even 22, higher inflation was positive for the currency, because that would assume that the central bank would have to hike the interest rates even higher to maintain the control of the inflation and stop the inflation at some point. Well, now the bad is the actual bad. So that means if the inflation is higher, then it's high. It's bad for the economy. People won't be able to buy groceries because that will be higher pricing. People won't be able to do any normal things because the household expenditure will be decreasing due to the factor of there's less money into the economy, and the money that is there's not worth what it is worth. So a $100 bill may be worth $90. So you go to the supermarket, you see the inflation actually on the veins. You see that on a daily basis. As of previously, the market was buying the thesis of the central bank. If the inflation was higher, they would hike the interest rate. So people would go and buy that currency and buy the bonds from that country. So they could capture the bonds, the short-term and the long-term bonds on a cheap price as it goes to a higher price, you know, maybe 70 basis points below the actual what it's supposed to be, or 25 basis points. So because they knew that the central bank would have to hike the interest rates, and therefore for you to invest in that country, you would have to buy the currency. So the demand would rise for the currency, and therefore generating a strength on that currency. Now it's completely the opposite. We forget about this thesis and we just look at the actual numbers. So if the numbers are higher, therefore we must have a very bad reaction on the currency. Investors, the market are taking off the money and putting up somewhere that they know that the central bank is quite right in a sense, you know, as of the ECB did a big miss yesterday on the inflation. Now, jumping to gold, we see that the capital is flowing out from Europe, is flowing out from Japan, is flowing into fiat like US dollar and also gold. Gold just reached the all-time highs again, above the $3,500 and very close to the 3,600 where I've mentioned at the beginning of this year, where most likely we could see gold by the end of this year, you know. Yes, there are all the analysts, there are all the business, there are all the big banks talking about $4,000, $5,000, $6,000 I've even seen. I don't think it's possible, you know, maybe anything up to 3,600, 3,800, 3,900, even 4,000. It's quite possible. Above 4,000, I'm not too willing to take these tests and do actually invest into gold and waiting for gold to go to 4,000. But gold accumulates already more than 30% increasing to the price for this year alone in 2025. So it's definitely a good investment to have some gold or physical gold or, you know, safety gold into your portfolio. Now, for know a little bit more further, what could be my next steps into EURUDollar or into EURUCAD, GBP CAD, you know, US dollar yen, as we've seen yen losing a lot of strength as well as the US dollar is gaining a bit of strength, trading back above 98. Come tonight, come this afternoon into the webinar from 4 to 5 p.m. I will be live for free, no charges, no emails required. You just go and drop the link. I will drop the link into the Telegram. So if you're not on the Telegram, go in the description and join the Telegram now. And I hope to see you there tonight. Otherwise, don't forget to subscribe to the channel and give us a thumbs up. I see you tonight or I see you in the next video. Bye.